Hello everyone, good morning, good afternoon, good evening, and in this video I will show you or I will analyze Nifty in detail, and I hope to continue this video series every month, and do hang around and let's dig deep into the Nifty. Now I see that 85% of the viewers of my channel are not subscribers, so please do me a favor by subscribing and like, share and subscribe so the video reaches a much larger audience. That's your bit you can do to help me take my message across to more people. Thank you. With that said, let's move ahead into looking at Nifty. Now here's a chart for Nifty. Now this is a quarterly chart, 3 months, and we're going as far back as 1990. So this essentially represents about 35 years of market action. Now when we look at this from an elite wave perspective, one of the things we know about is that elite waves, basically the directional move of the market is in 5 waves like this, and post a 5 wave or a pattern, this pattern there will be a 3 wave decline. Now this is the basic understanding of Elliott from which we will look at this. So the red one, the red pattern is the what we call an impulse or what we call the actionary market, and the yellow pattern is what we call the reactionary pattern. So after every 5 waves we will have a 3 wave decline. Now this is the basic pattern. So now let us look at the quarterly chart on a very broad way. So when we look at it on a very broad way, what we see here is, if we start from 1990, we can see there is a broad upswing, then there is a broad, there is a correction, then there was one more rally, then there was one more correction, then there was one more rally, there was a correction, and which we could have ended here or we could have ended here. Now where have we actually ended, what the Nifty is doing, we can only understand when we look at it in detail. So when we shift from here to a daily chart, the essential pattern remains the same, and what we are seeing here is if we go back all the way to 2023, now irrespective of whatever happened before, we need to see a 5 wave pattern, and after the 5 wave pattern there should be a corrective pattern. So if you look at this, we can see that there is a 5 wave pattern here, and post that we had a decline. So this decline, we could call it whatever, it doesn't matter when we are looking at such a large time frame. Okay, so you can call it whatever, here, wherever, but still doesn't matter. Now, one of the things that you will notice is that a decline always comes towards one of the previous major retracements or previous major lows that the market has done. Now, having seen this, we should we can estimate that broadly from all the way from here, all the way from here to here, market has actually made one broad up move. From here till here, the market has made one broad down move. Now this entire correction was almost about 60% of the value, but since it's a logarithmic scale, you will see that it is a little skewed in the scale. Now if you want more details, for just research a little on the logarithmic scale. Now if this was correct, and this is indeed a correction which has ended, what we need to do next is to analyze what has happened before. So there was again a broad up move, and there has been this pattern here earlier. Now since this is a daily chart, let us look at labeling this. Now when I start labeling this, I can see that this is a broad 1 and this is a 2. It has come up to retrace one of the earlier levels it has posted on the back, lows that it has posted. This is not what we call normally wave 4. Now post that, it seems to have done a 3-wave pattern here. Now, there's a broad discussion of what this market is doing. It is so there's a 3-wave pattern here. Now this could be a 3, this could be a 3, 4 and a 5 here. Why is this a 3 and why is it not a 5 will become very clear. And now we are in what I call the ending of wave 5. Now when we look at it here, the smaller one, as we dig deeper, what you can see here is the market has very clearly made what is called an impulsive pattern here. This much is very clear. There's no doubt on what this has done here. Now the next one, which we call it a 3, which I am calling it a 3, we don't call it a 3, which I am calling it a 3. If you've noticed, it has broadly corrected till this level here. So it has only corrected this entire pattern, it has not corrected this larger pattern. So if I dig deeper into this here and I go deeper, here I see that it has done what is called a leading diagonal. Then there was this 3, there was this 3, there was this 4, and it ended in a ending diagonal here. Now the ending diagonal is actually pointing that this larger pattern, some larger pattern has ended. Now because it corrected deeper than the level of wave 4 of the ending diagonal, I am not counting it as the end of a 5 here, or meaning this larger 5, the red larger 5 here. I am only counting it as the end of the yellow larger 5, and it has not truly corrected the depth that it would have corrected if this indeed was a red 5. So this red 3 has itself subdivided into a 1, 2, 3, 4, 5, with wave 4 of this 5 also clearly showing all the characteristics that are required for a smaller one. Now if you for a smaller impulse. Now if you will go deeper and see here, Nifty has made what we call the ending diagonal. Now this ending diagonal, as you can see, was formed in 2020. Now this ending diagonal, there was a grow over, meaning it went above the previous trend line as was seen earlier. Now that I blow it up and I change the scale, it becomes very clear. See here, on a single day it went up and it came down. Now the other one here, now this was on 20th of January 2020. Now because this pattern is ending, I need to label this as a 5 of some level or some degree. Now having done this correction, Nifty started moving up again. So the question now remains is, if this is indeed a 5, where is it going to end? That's the only question. We don't have much to look at in the deeper way. I will look back to a larger period, but first we need to understand what is happening here, and only when we understand what is happening here will we be able to appreciate this entire larger pattern. So let us look at what is happening here. In this pattern here, Nifty appears to have started with what I would call a leading diagonal, same as it did in wave 3. It is essentially repeating a similar pattern, which is what I call a leading diagonal, and there was a similar pattern here. So it is doing nothing new. There was a similar pattern here, which is called a leading diagonal, and now having done this similar pattern of a leading diagonal here, Nifty went on to do a 1, 2, 3, 4, 5 all the way till here. Now how is it? As we start labeling it deeper and deeper and deeper, it will become very clear. Here is a 1, here is a 2, here is a 3, here is a 4, and this entire movement all the way from here, I am labeling it as a 5 because this is looking like an ending diagonal. Now, what are the things that we need for this count to be correct? So we need 1, 2, 3, 4, 5s within the one, because the market is a fractal. We need 1, 2, 3, 4, 5s within this. So this essentially can be labeled like this. We can take this 1, 2, 3, 4, and this is essentially the 5 of a different degree. Now within this, can this again be a 5? If you actually go dig in, you can actually label in the 5 in all of them. So here the wave 3 pattern is again a 1, 2, 3, 4 and a 5. So that gives me a lot more conviction that this next one is also a 5. Let me label this. So you see here 1, 2, 3, 4 and a 5. Can I go inside this and label this 1, 2, 3, 4, 5? Yes, I can. It's quite simple, and it is quite easy to label this 1, 2, 3, 4, 5. If you just take the larger corrections, the 1, 2, 3, 4, 5. Now one of the classic ways of looking at an impulse and calling it an impulse is the presence of gaps in one-sided direction continuously, one after another. Now this is clearly what is called an impulsive action. Now so far, this entire pattern all the way till here appears to have done 1, 2, 3, 4 and 3, 4, and this has to be a 5. Now the last 5 has to remain or has to unfold either as an impulse, which is a 5-wave pattern but with no overlaps. But since 2021, market has been overlapping the same action again and again. So with this pattern is repeating, the only thing that this pattern is telling, because it is a directional move from one point to another, it is not a sideways movement from one point to another. So because this is a directional move, this becomes a motive pattern, this becomes an intention pattern, and this entire thing, the only only question that needs to be answered is, where does this end? Now once where does this end is clear, we will backtrack this and we will see what the larger trend is suggesting to us. So now here the suggestion is, now if this were indeed 1, 2, 3, 4 and a 5, this is perfectly clear. This is more or less looks clear. Now there have been corrective waves within this. So we have what is called an ending diagonal here. Now I will show you previous ending diagonals which have unfolded in 2007, in 2020, in 2008. There was an ending diagonal. We will get into that. So essentially they are the same patterns of an ending diagonal, and post the ending diagonal, markets tend to collapse. Market tends to come down for no apparent reason, and the reason coming much later. Now if you look at this pattern, what is the most likely outcome of this pattern? This pattern is likely to end, and because this is has been in a directional move up, the only likely direction that the market can do is this. Now will the market break away from this? Yes, entirely possible, but we need to always keep in mind that this forecasting the market is a science of probability, and because it is a science of probability, we are only saying what is probable, not exactly what is going to happen. Okay, now when we look at this and understand, the first thing that we need to know as per the theory is, if there is an ending diagonal which is ending a large up move, okay, the first target for such an up move remains the beginning point of the ending diagonal, which in this case happens to be at 14,200. For almost 2 years, Some of you may remember way back in 2019, 2021, I was very clear, vehement that the market has to test 14,200 when it was trading at 18,000, 14,200 when it was trading at 18,000. This was simply based on the fact that the wave 4 was at 14,200. Now, without testing it, the market has just been going up and up and up. So the first level for this market to test would be 14,200 if indeed the ending diagonal is ended. Now, why am I so confident that it has ended? If you will notice that the leading diagonal is always appearing at the beginning of a trend. The leading diagonal rarely, if ever, I have not seen in 100 years of data that I have studied, the leading diagonal rarely, if ever, appears at the beginning, in the middle like this. It is most of the time, or this is actually the topish formation. You will see that most of the time the leading diagonal starts at a new trend. It doesn't right away start from here. You will not get a leading diagonal, all of this. The leading diagonal needs a correction before that, and only then it will go up. Here, if you see, the width of this leading diagonal and the width of this correction is much, there is a lot more difference between the two in terms of the magnitude. If this was coming down very clearly, it was a large down move, then I would have called it a leading diagonal. In this case, there is, at least in my mind, there is no way this could be a leading diagonal. It can only be an ending diagonal, especially because of these three. Now, could we be wrong? Yes, we could be wrong. So how do we check if we are wrong or right? So let's move back to the quarterly chart and we take the broad larger pattern and we start understanding with the broad larger pattern. Now the broad larger pattern is a 1, 2, 3, 4, 5, as I've said. It's a 1, a 2, a 3, a 4 and a 5. So if this is the large pattern, what we need to check is the volume, which will tell us what is actually happening. So when I plot the volume here, we will plot a lot more things. When we will plot the volume here, immediately we see there was a rise in volume during wave 3, which ended with a massive rise when the market collapsed, and again with a massive rise when the market started going up. Now, so this was essentially the 3. Now, if we come to this, many would argue this was not a 3, this is not. So when we start looking only from this pattern here, all the way from going back to 2008 and look at this, there was a massive increase in volume all the way up till here. So that gives me a lot more confidence that this wave here was the 3 and this one which we are unfolding is actually the 5. So based on this, looking at the volumes, volume should die down or should be much less than what it is in wave 3. Here, wave 3 volumes are higher. So irrespective of whatever happens here, so it appears that this point here was wave 1, where very few people believed that the market will go up, then it came down, then we had a long wave 3 which rise in volume slowly over a consistent period of for 9 years. We had a 9-year bull run here, all the way from 4,400 to 12,400. Okay, and then it dipped down into a 4, and this was the last leg up, which is the 5. Now, having completed a 5, can it do a 6 and a 7? Yes, it does. It can do a 6, 7, 8 and 9. But truly speaking, once the 5 is complete, markets tend to come back. Now, here's a weekly chart. Once the 5 is complete, markets tend to retrace almost till the beginning of wave, or till the end of wave 4, or the beginning point of the leading diagonal. Will this happen? The charts are saying so. The market is saying so. Market is saying so. The behavior of the trading group is saying so. As some of you may remember, when market was at 16,800, I was calling for a retest of this. So we have 3 retests we have a breakout, or what we call a throw over. Now what will confirm that my view is correct is rather quickly this market has to start trading below this trend line. The minute it starts trading below this trend line, which today stands around 19,060 up, or let us round it off to 19,050 or even 19,000. Once this market comes back below 19,000, we are looking at this market heading down as a first point, at least towards this, which is 17,500. But as people who understand a late wave, we know that this is the only point where it should find support. It could be plus or minus few points, but broadly the pattern, even if it has to go up, it has to come down till here and then complete essentially some kind of a correction. And depending on this, we will be able to call what will happen next. Only when it does this will it go up. Now, is this complete? That's a big question. This is the only question I have today is this entire price movement of the ending diagonal complete? There's absolutely no way I can find it out, but if I remove off the volume, and if I just take a broad view of what was wave 1 and see if that is the kind of similar movement we have had after this, we are more or less ballpark in the same figure, in the same arena. So here you can see 1 and wave 5 are both approximately the same. So there should be no doubt left that because this is the longest wave 3, and this price movement of 1 is equal to is the same price movement of 5. Now, mind you, we are looking at a log scale, which is the only way this shows up. Now, so what am I looking for the next month or so, at least, for the market to top out here? Most probably it should top out by tomorrow, which is my count, my daily trend change count. And once it does that, I am looking for this market to start heading down steeply, or rather quickly, because such actions of the ending diagonal always result in a market unfolding in a near vertical fashion. Now, has this happened before? Yes, it has happened before. When has this happened before? Just a couple of years back or 3 years back, this market has done exactly the same thing here. There was an ending diagonal, there was a throw over, there was a retest. Are we going to repeat it? Looks like, if patterns are to repeat, which is what I believe in, if patterns have to, history has to repeat, something big is coming to take it back till here. Now, will it stop at 14,200 or not? That's a different question. We will look at 14,200 after it is done. Now, has this ending diagonal unfolded before? Yes, it has been. When was this? If you go back, way back to 2020, you will see that market in 2020 also did what is essentially a clear ending diagonal. Where are we? We are here. This is essentially an ending diagonal. Now, this was a much smaller ending diagonal, which ended. We had a throw over, we had a, if you look at this pattern here, I hope that it becomes clear. We had this throw over here. If I draw it properly, this is what it did. If I draw this properly, this is what it did. Did we have a throw over? Yes. In that time, we had 3 days of throwers and closing below. This time in 2020, we had, let's go back to 2020. Here is in 2020, it did one day it closed above, then a couple of days it closed below, then the last final day it gapped up higher and closed below. So what can we infer from this? That this market, though it appears the strongest just as it appeared here and in 2008, it appeared the same, it appeared the strongest at that point, but inherently it was weakest because this was coming next, which very few failed to see. This was coming next, which very failed to see. Now, if you go back into January 2020, nobody expected the whole world to get into a lockdown. Now, did anybody know in January 2020 that there would be a worldwide lockdown? My answer would be no. Most of the lockdown words or lockdown was only came in post mid-March or end of March. By then, market has already put a bottom. Now, this is what happened earlier. Now, if you go back to 2008, did anybody know about the extent of the subprime crisis? No. Many were talking about it, but nobody knew the extent of it, and nobody knew that a 125-year-old firm like Lehman Brothers would collapse. When did that news of Lehman Brothers collapse come in? It was here, way back when the market put in a bottom in October 2008. So what are we to infer from this? That whatever is going to come, it is something which we know right now. We have a doubt about it, but nobody knows for sure the extent of the problem here. So this will only get cleared once the what is the problem, where is it heading, and the extent of that problem here. Only then will we know exactly what is happening. I hope this makes it clear. Now, it really doesn't matter here when we start looking inside this one. Where has it ended? What pattern it is? How it is unfolding? That is purely a technical view of academic interest. But what we can infer is if you take a parallel channel and or if you take a pitchfork and draw a pitchfork, you will get more or less a broad band like this, which has been moving. So now, where will the market turn? I would simply say it is almost at the end of it. So at the end of this upswing. Now, I did make a mistake here by listening to the noise, by listening to people. I was screaming here that this pattern is not one which will turn down, and then I suddenly shifted. My bad. Even after so many years and looking at the market, I too got carried away, which I should not have. I should have stuck with my original view from here where the market would head to 19,100 and 200, and that would have made it perfect. But now that it has reached 19,200, be extremely cautious is my view. Now let us see it's a few other charts where we had ending diagonals so that we understand how this pattern unfolds. Let's look at a few other charts. Now let us look at a few other occurrences of ending diagonals before and what happened after that, so we can get a fair idea. Now here is Yes Bank, and this was a pattern which unfolded way back in 2018. And you can see clearly at this high of 410, which was almost the all-time high for Yes Bank in India. It was very clearly an ending diagonal with 3 trusts to the top of the trend line. And if you want to label this, it's very clearly you can label this 1, 2, 3, 4, 5, and that was the end of the ending diagonal. Third thrust, it took a throw over, it went above for a day and then declined. Now at this point in time, on what was this date here? This was a date of 20th August 2018. At this point in time, everything looked rosy. The market was at a high, it has broken out of a sideways band, it had really taken out of a thrust, exactly the same scenario which is, or the argument which people are giving, which analysts is giving, which the general public is also looking at. This was a classic ending diagonal. And now what happened? After that, it just collapsed. Now the reason why it collapsed came way back later, not on this day. Nobody knew on this day that this was coming. Nobody knew all the while the ending diagonal was unfolding that is coming. Only technically from a elite wave perspective, this looked like an upside wedge, which is what Even today, Nifty is also looking. So at this point in time, it was looking like the market is in supreme strength and everything is perfect. It's an all-time breakout. People were talking about 1,000 on a yes bank. Now what happened? This is what is coming. This is what came later. So now it doesn't matter whether we feel what traders feel, what we feel today, but such patterns are extremely dangerous and we have to keep in mind. Now this similar ending diagonal also unfolded in Motilal Oswal Financial Services. Motilal Oswal Financial Services, again way back in 2018. Now this is what, as I unfold, you will see what I was talking about. All-time high, everything is rosy, market is making higher highs, higher lows, it is breaking out, all the extreme readings were here, same like Nifty, everything was good, everything was rosy. 2018 in Jan, there is absolutely no chance that this could head down. In fact, I remember telling one of my friends who then was at the senior level at Motilal Oswal that this is what we are heading to. You are heading below 1000, you are even heading as low as 450, and the only thing he said, to pagal hai. Now I saw nothing like this would happen. Now this was a person who's there at the senior most level and he is talking about this. Yaar tu pagal hai, kuch bhi bolta hai. And this is what comes next. And as long as until today, my original target was all the way till here, it came all the way to 540, or from 1600 to 540, and till today we are nowhere. And where was the original target which I had? It was I had at this low, and it did hit that low much later in 2019. Strange, right? Now this is the power, or this is the effect that you will see later on once the ending diagonal is ended. At the top, everything seems perfect, everything seems rosy, everything seems great. Now take the case of Adani Enterprises, which happened recently. Was there an ending diagonal at the top? Arish, was there an ending diagonal at the top? Could that thing have been forecast? Yes, of course it was. And what was the target? Everything, it will become very clear the minute I draw the lines. Here was the line. Here is the ending diagonal triangles, 3 trusts to the upside, 3 trusts, there is an overlap, there is this, and it was here that the market appeared at the top and then it collapsed. Now what happens? The beginning of the ending diagonal is here. You see this entire line, there is no time in this entire rally that the market stopped. So how do you draw this line? So from here you take this 1 up, 2 down, 3 up, 4 down, 5 up. Now once it starts collapsing, where is the target? The beginning of the ending diagonal. Where did it stop? The beginning of the ending diagonal and a little below. Now where did the Hindenburg report come? It comes on the 20th in post somewhere in end of Jan. And by then, market has already fallen. Market somehow knows what is coming ahead. So it starts moving even before the problem starts, especially in the case of the ending diagonal. When the ending diagonal is formed, I have learned over the years that it is prudent, it is sensible to pay attention to it and just be careful. I'm not saying go short, I'm not saying do that. Just be very, very, very careful what is happening. Now, another chart I wanted to show you today is euro dollar, and this has a very interesting pattern as far as the ending diagonal goes. Now, way back in 2007-2008, euro dollar was at the very top. We kept having this thrust to the upside, and every time it kept declining. So what was going on? So if you just draw the lines and observe the chart and observe the pattern is very clearly an ending diagonal. So this was the case of a double ending diagonal here, and it was the first time the ending diagonal did end of wave 3, where the beginning was here, and the minute it started declining from here was the target. It hit the target, put in some tails on the bars, and then it started rallying up again. Now when you check the pattern here, it is again 3 thrusts to the upside, 1 throw over, and then classic higher lows, higher highs, and at this point in time, there was nothing to indicate that this would collapse. It was doing the same level, it was coming up again and again, it was doing all of this. And at this time, I remember even now very clearly, people were talking about $2 to a euro, and that the eurozone was very strong and everything. And then this was just about the subprime, beginning of the subprime crisis. And then, in spite of the crisis in the US, dollar goes strong. What is giving us that the dollar is gone? What is giving us an indication that the dollar will go strong? Absolutely nothing here. Absolutely no reason why the euro should have collapsed at that point in time, except that this was given as an indication by the ending diagonal. This is the only warning that we had at this point and nothing else. So technically, this was our first target, which is what hit, and then this was, once this was broken, the next target would come in here, and that is what happened. And over such a large period of time, this is what unfolded in the euro dollar. So could we have caught this top by paying attention to the ending diagonal? Yes. Is there a similar pattern in Nifty? Yes. Will this lead to a collapse in the Nifty? Maybe, don't know. But this is not the point to be aggressively long. This is the point to be extremely cautious. This is the time to be very careful on what is happening. That is all for now. I hope you got a better idea of why I am looking at a market declining and not very gung-ho about upside, especially because after the second test of 16,800, when I had forecast, my target was 19,200, which is more or less, which is reached. And now, with having been reached, the pattern is complete. The pattern seems ready to tip over. And where will it tip over? It should tip over anywhere in the next day or two. And that is my assumption. And let us see how Nifty unfolds. And just be careful, cautious with your longs, and it pays. I mean, it is prudent to be careful. That is all. That is all for now. Trade well, trade wisely. May your trading never be the same again.